Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock with news of banking stresses in both China and Europe. Firstly, in the US, however, the growth of consumer credit slowed sharply in April, very much lower than expectations. It was lending for cars and for education that showed the weakest growth. The OECD is predicting the global economy is set to grow 3.5% this year, its best performance since 2011, with growth nudging up to 3.6% in 2018. That is a slight improvement on their March estimates. It said increased global trade and investment flows had offset a weaker outlook in the US. China has announced it is cutting taxes and fees on businesses by about $58 billion this year from July the 1st, and that includes reducing or eliminating charges for electricity use and supervision fees for insurance and banking firms. They're aiming to reduce a whole range of government charges and taxes on businesses of over $200 billion in this drive for efficiency. However, at the same time, it appears that large state banks are raising interest rates for both residential and business lending. This interest rate rise is another squeeze on SMEs in China. Typically, they don't have easy access to bank loans, and interest rates in their bond market have been rising sharply recently as Beijing moves to reform financial markets in a necessary move to control financial stability. But for smaller enterprises, who are often highly leveraged, this is clamping them in a harder squeeze. Overnight in Spain, their fifth largest bank failed and was promptly absorbed into their largest bank. The event went off without a hitch, showing how far the ECB has come in managing banking failures. This comes just a week after the largest Italian bank was formally rescued by authorities. The Spanish bank, however, failed because it could not handle leftover toxic mortgages from their housing boom of a decade ago, and emphasises just how fragile that legacy has left local banks. In Australia, they've taken the record for the longest run of uninterrupted growth in the developed world in data released yesterday. It has been more than 103 quarters, more than 25 years, since they've had a technical economic recession. But they remain vulnerable, with essential reforms unable to be progressed in a toxic political situation. The cost may be a future of subpar growth. They need a clean-out, but any stumbles there will not help us here. In New York, the US Treasury 10-year yield is higher at 2.18% today. The price of oil is also sharply lower, with the US crude benchmark now just under $46 a barrel, while the Brent benchmark is now just over $48. Both are down by about $2 a barrel. An unexpected rise in American crude inventories is behind the move. The price of gold is lower as well, now at $1,285 an ounce, a $6 fall. And the Kiwi dollar is pretty much unchanged today at 71.9 US cents. On the cross rate, the Kiwi is at 95.3 Aussie cents and 63.9 Euro cents. The TWI is at 75.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.